Right now, you probably believe that the money in your bank account actually exists somewhere, maybe in a vault, maybe in some secure digital ledger, but somewhere real and tangible. Here's the truth that will shatter that illusion. If everyone who has money in banks tried to withdraw it at the same time, the entire banking system would collapse within hours. Not because of some temporary shortage or technical glitch, but because most of the money you think exists simply doesn't. It never did. The numbers in your account are mostly credit promises and accounting entries, not actual reserves. The modern economy runs on a system where banks create money from nothing, and understanding this mechanism is the key to understanding why you feel poorer, despite working harder. The Sabio Observer recognizes that this isn't a conspiracy theory or exaggeration. It's exactly how the debt system is designed to function. When you deposit $1,000 in a bank, you think that money is safely stored there, but the bank immediately lends out $900 or more of it, which becomes someone else's deposit, which the bank then lends out again, creating a multiplication effect where your original $1,000 becomes $10,000 or more in total money circulating in the economic system. This process is called fractional reserve banking, but even that term is misleading because modern banks don't really operate on reserves at all anymore. They create money through loans first, and worry about reserves later, if at all. The money system is built on perpetual credit creation, not actual wealth, and here's why this matters urgently in 2025. This system of creating money from nothing has unavoidable consequences that are destroying your purchasing power right now. First, it creates permanent inflation, because money is being created faster than actual goods and services are being produced. Second, it locks society into perpetual debt, because all money is created as loans, meaning the total debt will always exceed the total money supply. And third, it concentrates power in the hands of banks and governments who benefit from this system, while everyone else pays the price through higher costs of living and debt servitude. Stick with me, and I'll expose how this hidden system really works, why it guarantees your poverty, and what you need to understand before the next financial crisis exposes how fragile this house of cards truly is. Ready to see the greatest monetary illusion ever created? Let's break down the system they don't want you to understand. Let's start by destroying the most fundamental financial myth you've been taught: that your bank account represents actual money being stored for you. Open your banking app right now and look at your balance. See that number? That's not money, it's a promise. It's an IOU from the bank saying they owe you that amount, but they don't actually have it. If you and everyone else who banks there tried to withdraw your balances simultaneously, the bank would fail instantly because they've lent out the vast majority of deposits. This is why bank runs are so catastrophic. They expose the fundamental lie that the banking system is built on: the illusion that your deposits are safely stored when they're actually being used to create more money through lending. Here's the mechanism that creates the illusion. When you deposit $1,000, the bank is required to keep only a small fraction as reserves, historically 10%. But in recent years, that requirement has dropped to zero for many banks, so they immediately lend out $900. That $900 becomes someone else's deposit at another bank, or the same bank, which then lends out $810 of it, which becomes another deposit, which gets lent out again, creating a cascading multiplication effect. By the time this cycle completes, your original $1,000 deposit has created $10,000 in total money circulating in the economy. But here's the critical insight. Only your original $1,000 actually existed as real money. The other $9,000 was created through accounting. Entries, credit money that exists on balance sheets, but has no underlying reserves backing it. And the modern evolution of this system makes it even more concerning. Banks today don't even wait for deposits before lending. They create loans first, and those loans automatically create deposits in the borrower's account. This is called credit creation, and it means banks are literally creating money from nothing with every loan they approve. When you get a mortgage for $300,000, the bank doesn't transfer $300,000 from some pool of depositor funds. They simply create a new deposit in your account worth $300,000 by typing numbers into their computer system. That money didn't exist 1 second before they approved your loan. The debt system isn't based on lending out existing money. It's based on creating new money through debt. And this distinction is crucial because it means the entire economic system is built on credit expansion, rather than actual wealth accumulation. The money you think you have is mostly just credit someone else owes, backed by credit you owe, in an infinite chain of promises with almost nothing real at the foundation. And this creates predictable, unavoidable consequences. Now let's expose the most important financial truth that economics textbooks obscure. Modern banks don't primarily lend out deposits, they create new money by issuing loans. This reverses everything you think you know about banking. You were taught that banks take deposits from savers and lend those deposits to borrowers, acting as intermediaries between people with excess money and people who need money. That's completely backwards. In reality, banks create deposits when they make loans, and they do this without needing any pre-existing deposits at all. This is how over 90% of the money circulating in the modern economy came into existence, not through government printing presses, but through commercial banks creating credit money. Here's a real example of how this works. You walk into a bank and apply for a $50,000 car loan. If you're approved, the bank doesn't go to some vault or depositor pool and transfer $50,000 to you. Instead, they simply credit your account with $50,000. They create that money through a digital accounting entry. You now have $50,000 in your account that didn't exist before. You spend it on a car, and that $50,000 becomes the car dealer's deposit, which his bank can now use as the basis for more lending, creating even more money. The original $50,000 was created from nothing. No depositor lost money, no vault was emptied, no reserves were depleted. The bank just created new money by issuing you a loan. And simultaneously, they created a $50,000 liability on their books, your debt to them, which from their accounting perspective balances out. This is why the money supply can expand so rapidly, why the banking system has such enormous power, and why the financial elite accumulate wealth so efficiently. Every loan creates new money, and every loan creates new debt in equal amounts. But here's the twist. The interest on that loan wasn't created. You borrowed $50,000, but you owe back perhaps $65,000 with interest over the life of the loan. That extra $15,000 in interest wasn't created when the loan was made, which means you have to obtain it from money that already exists in the economy, money that someone else borrowed into existence, also with interest obligations attached. This is the mathematical trap built into credit-based money creation. The total debt always exceeds the total money supply, because interest demands repayment of money that was never created. And this leads directly to the unavoidable systemic consequences that destroy financial stability for everyone except the banks. Let's examine why this system of creating money from nothing produces 3 inevitable outcomes that are crushing your financial future right now. First, permanent inflation becomes mathematically unavoidable. When banks create money faster than the economy creates real goods and services, you get more money chasing the same amount of stuff, which means prices rise. The cost of living doesn't increase because things become more valuable. It increases because money becomes less valuable, due to constant credit expansion. Every loan that gets approved, every dollar that gets created through banking, dilutes the purchasing power of all existing dollars. This is why you feel poorer. Despite working the same hours, your wages might stay flat or grow slightly, but the money system itself ensures that money loses value faster than you can earn it. Second, perpetual debt becomes a permanent feature of the economic system rather than a temporary condition. Because all money is created through loans, and all loans require interest payment beyond the principal created, the total debt must always exceed the total money supply. This isn't a bug, it's how credit-based money creation works. You can't pay off all debt in the system because doing so would eliminate most of the money supply, which would collapse the economy. So the debt must grow forever, which means new loans must be created constantly just to generate the money needed to service the interest on old loans. This is why national debt keeps growing, why personal debt keeps expanding, why the banking system is addicted to credit growth. Without perpetual debt expansion, the whole system collapses. You're not in debt because you made bad choices. You're in debt because the money system requires someone to be in debt for money to exist at all. And third, this system concentrates power into the hands of banks and governments in ways that create permanent economic inequality. Banks profit from creating money they never had, charging interest on credit they generated from nothing, and foreclosing on real assets when borrowers can't pay debts in a system designed to be unpayable. Governments benefit because they can borrow unlimited amounts through this credit creation mechanism, spending beyond their tax revenue while banks create the money to purchase government bonds. Meanwhile, ordinary people are squeezed. The cost of living rises through inflation. Debt becomes inescapable through mathematical design, and wages stay relatively flat because labor doesn't benefit from credit creation the way capital does. The wealth gap isn't an unfortunate side effect. It's the natural result of a system where money creation benefits those who control credit, banks, and financial elite, while burdening those who need credit, everyone else. This concentration of power through monetary manipulation is why the modern economy feels rigged, because it literally is. The system creates money from nothing, but only banks get that power. You have to borrow what they create and pay interest on it forever. So there you have it, the hidden system exposed in all its fraudulent glory. The money in your account doesn't really exist as reserves. It's mostly credit created through loans. Banks don't lend out deposits. They create new money by issuing credit, which is how 90% of money comes into existence. And this system guarantees 3 outcomes: inflation that erodes your purchasing power, perpetual debt that can never be fully repaid, and concentration of power that enriches banks while impoverishing everyone else. This isn't a flaw in the system. This is the system functioning exactly as designed. The question you face now is, what are you going to do with this knowledge? Are you going to keep playing along, storing your wealth and depreciating currency, taking on debt in a system designed to be unpayable, working harder while money creation enriches those who control credit rather than those who create value through labor? Or are you going to make different choices about how you hold wealth, how you use credit, and how you position yourself in an economy that's fundamentally rigged against wage earners? Because understanding that money is created from nothing by banks changes everything about what money actually is and how you should treat it. Here's your action step. Calculate what percentage of your net worth is in bank deposits versus real assets. If most of your wealth is in checking and savings accounts earning minimal interest while inflation runs at 5 to 8% real rate, you're losing purchasing power every year even if your balance grows nominally. Then look at any debt you hold and recognize it's not just money you borrowed, it's money that was created from nothing when you signed loan papers, and you're paying interest on that created from nothing money with your real labor for years or decades. Sit with the injustice of that. And if this video revealed the fundamental fraud underlying the entire monetary system, if you now see that money creation from nothing is the source of inflation, debt slavery, and wealth concentration, subscribe to this channel right now, because what comes next is crucial. I'm going to show you specific strategies for protecting yourself in this credit-based system, how to position your wealth in assets that can't be created from nothing, and why the next financial crisis will reveal just how fragile this illusion really is. The system creates money from nothing. The question is, will you keep accepting nothing in return?